today we'll deal with the topic fund flow statement. Fund flow statement is a statement which shows the movement of funds. It indicates various means by which funds were obtained and the ways in which these funds are applied. Now let's see what are the significance of a fund flow statement. It helps in the analysis of financial operations. It helps in the formation of a realistic dividend policy. To formulate a very good realistic dividend policy, we need to have sufficient working capital. A fund flow statement helps us to ascertain the working capital in our firm. It helps in the proper allocation of resources. It acts as a future guide. A fund flow statement helps us to understand what is the current requirement of working capital in a firm. Fourth point, it helps in appraising the use of working capital. And the last point, it helps knowing the overall credit worthiness of a firm. Working capital ensures that the firm is creditworthy. When a firm does not have sufficient working capital to meet its day-to-day expenses or to meet the day-to-day requirements, a firm will not be creditworthy in the eyes of a shareholder. So, through the preparation of a fund flow statement, the shareholders will be able to understand whether the firm is creditworthy or not. Now, let's see what are the limitations of a fund flow statement. First one, it is not a substitute of income statement or balance sheet. Fund flow statement cannot be used as a substitute of balance sheet or a profit and loss account. Second one, it is only a rearrangement of data given in financial statements. Fund flow statement is prepared only using the current assets, the current liabilities, and the other factors which are related to working capital. Third point, it cannot reveal continuous changes. A fund flow statement is prepared for a current year. The requirements of working capital of a firm keeps changing every year. So, the statement which we prepare this year cannot be used for the next year, or it cannot be used as a base either. Last point, it is time consuming. Now let's see what are the steps in the preparation of a fund flow statement. First one, preparation of schedule of changes in working capital. Second one is a calculation of fund from operations. And the third one is the preparation of a fund flow statement. Now let's see how we can prepare a schedule of changes in working capital. For this, there are certain rules for which we have to apply to current assets and current liabilities. Let's see them. First one, if there is an increase in current assets, it leads to increase in working capital. Current assets can be cash, stock, debtors, bills receivables, prepaid expenses, etc. And the second one, decrease in current assets will result in decrease in working capital. So the relationship between current assets and working capital is a positive relation. When current assets increases, the working capital also increases, and when the current asset decreases, the working capital also decreases. Increase in current liability results in decrease in working capital. The various current liabilities are creditors, bills payables, bank overdraft, short-term loans, outstanding expenses, etc. The current liabilities and the working capital has an inverse relationship. Decrease in current liability results in increase in working capital. So whenever the current liability decreases, the working capital increases, and whenever the current liability increases, the working capital decreases. This is the format for the preparation of schedule of changes in working capital. Here we list out the current assets, and then the A portion will be the total of the current assets, and then we list out the current liabilities, and this will be the total of the current liabilities. The working capital will be the difference between the total of current assets and current liabilities. And then we'll be finding out whether the working capital has increased or decreased compared to the previous year. This is an example of schedule of changes in working capital. In this, we can see various current assets, their total, various current liabilities and their total. And we have also found out whether there is a net increase or decrease in working capital. Now let's see how we can calculate the fund from operations. This is the format for the preparation of fund from operations. We'll be starting with the net profit for the year, and to this we'll be adding various non-operating expenses and losses incurred. The various non-operating expenses and losses are depreciation, provision for tax, loss on sale of fixed assets, loss on sale of investments, goodwill written off, preliminary expenses written off, etc. Now let's see how we can calculate fund from operations. To calculate fund from operations, we'll have to add various non-operating expenses and losses to the current year net profit. These are the various examples of non-operating expenses and losses. They are depreciation, provision for tax, loss on sale of fixed assets, loss on sale of investments, goodwill written off, preliminary expenses written off, etc. When provision for tax is treated as a non-current liability, the adjustment have to be made in the statement of fund from operations and fund flow statement. If provision for tax is treated as a current liability, the adjustment comes in the statement of schedule of working capital. Then let's see what are the non-operating incomes. The non-operating incomes and profits has to be deducted. The various non-operating incomes are profit on sale of fixed assets, profit on sale of investments, dividend received and other incomes received. So the net figure will be fund from operations. If the figure is a positive figure, it will be fund from operations, and if you are getting a negative figure, it will be fund lost in operations. Now we'll move to the last step, which is the fund flow statement or the statement of sources and application of funds. So this is the format of a fund flow statement. In this, we can see the various sources of funds and the various application of funds. The various examples of sources of funds are issue of share capital, issue of debentures, sale of fixed assets, sale of investments, other non-trading incomes, fund from operations, etc. And these are the application of funds. They are redemption of debentures, redemption of preference shares, purchase of fixed assets, purchase of investments, etc. The sources of funds explains the various sources through which we can raise funds which are necessary for our business, and the application of funds explains the various sources through which we have applied the funds we have in our business. Fund flow statement can be done in an account format or in a statement format. This is the model for the fund flow statement in a statement form. So today we discussed about fund flow statement, what are the importance of fund flow statement, the limitations, and what are the various steps which are involved in the preparation of a fund flow statement. Thank you.